and it is my pleasure to welcome all of you at this important conference on digitalization of international finance. I would like first to extend my appreciation to my friend and partner, Mark Ozan, for his cooperation and engagement and his colleagues over the last few months in preparing for an important event. My thanks and appreciation to all the speakers for accepting our invitation to share their views and experiences. My special thanks to the governors, Rashid Al-Maraj and Governor Tariq Amir, for accepting our invitations. And I would like also to thank Elisandra, the Deputy Governor from Bank of Italy, for being with us to chair the first session within the G20 Italian presidency. Also, I would like to thank Ihan from the World Bank and all other distinguished speakers. Let me also extend my thanks and appreciation for the governors from our region who has taken the time to attend our conference today, the governors of United Arab Emirates, the governor of Iraq, and the governor of Libya, and the governor of Palestine Monetary Authority. Thank you for taking the time. I know you are extremely busy for your presence with us and all other distinguished attendants. Thank you all very much for being with us. Of course, this is an important topic and important conference on the future of international finance. As you all know, the global economy is experiencing highly digital revolution. And I would like only to draw to your attention to one number. Estimates by 2025, what is called the global data sphere, will grow to 163 trillion gigabytes from just 16.1 trillion gigabytes 5 years back. This is tenfold increase, and therefore digitalization is changing the way we do business and changing the way we communicate, changing the way we are going to do our jobs. Of course, with digitalization, there will be a replacement of many existing jobs, and this is challenging for policymakers. On technology, finance, and payments beyond the traditional frontier, the classic banking system faces the risk or opportunity of an open banking system, and therefore bankers got to benefit out of the opportunity and to manage the risk. In fact, given the heart of financial services lies in payment services and instrument, domestic payment systems have undergone over the past few decades, as you know, a radical transformation. And COVID-19 pandemic has further accelerated the shift to digital payments. The demand for cross-border payments is expected to continue to grow. Therefore, improvements in cross-border payments would make a real difference for many of the poorest. As a result, the G20 under Saudi Arabian presidency last year endorsed in October 2020 a roadmap to enhance cross-border payments. The IMF is supporting payments and digital transformation in our region. The economic and financial trends in the region point towards an acceleration of payment flows, with the cross-border payments among our member countries forecasted to increase. The IMF, in the framework of financial inclusion for the Arab Region Initiative, has issued in September 2020 guiding approach for digital financial transformation in the region. And I would like to thank our member central banks for the activities they have undertaken during the Arab Day of Financial Inclusion last month. Furthermore, in line with the efforts I stated earlier to address cross-border payment challenges, the AMF, under the leadership of Arab Central Bank's governors, has launched in February 2020 Puna Payment Platform, a centralized multi-currency cross-border payment system enabling clearing, settling, and processing near real-time payments. The system supports both Arab and international currencies and is currently in the process of onboarding participants, both commercial and central banks. The system was designed in line with the international standards and the principles, including FATF AML CFT principles, the Security Council counterterrorism guidelines, and the UN sanctions lists. Here, I would like to thank the governors from our region for their continuous support for Puna payment system. To conclude this introductory remarks, to succeed in digitalization of international finance, it's very important to get the balance right, given the risks we are facing. I don't want to take longer time. I will stop here and give the floor to my friend, my colleague, partner in organizing this event, Mark Ozan, for another brief introduction. Please, Mark.
Thank you, and good morning, good afternoon, everyone. President Almidi, thank you very much for your opening remark, and let me thank you here at the outset for the leadership and the support you have given us to decide over the last 3 months that it would be a great idea to co-organize this online conference entitled The Digitalization of International Finance. You provided strong support about this idea, and it was a great pleasure to work together with all the team to make this event a reality, and taking into account different time zone and schedule constraints for all of our eminent speakers. I want also here to thank our strategic partner, Accenture, who has provided support to our institutions in putting together a series of events related to better understand the technological change happening in the field of payment and money. And I welcome here Usman Mendeng, who will be speaking also today in the program in our first sessions. This is indeed a great timing and opportunity to gather different stakeholders within the Middle East and outside Eurasia to reflect and to rethink the rules of the game in the area of international finance. 2 weeks ago, we also hosted, in cooperation with the G20 chair, Italy, another event that covered the other aspect of international finance, focusing on the future role of the SDR and the future development of capital flow. While the economic ramifications of COVID-19 pandemic are still unfolding, the pandemic, as you said at the beginning, has accelerated trends in digital innovation that were already underway. But the pandemic also shown that while central banks continue to safeguard essential trust in money, it is technology that enables our globally connected world and the provision of money to go round. Technology has been indispensable in helping to mitigate the economic and social impact of COVID-19 crisis. One key challenge, therefore, for authorities and central banks around the world can use their role as catalysts and facilitators to spur digital innovation and increase interoperability or integrations in cross-border payment services. Digital payment and central bank digital currencies are an important part of our agenda today. As central banks are reflecting on how to respond to the evolving digital payment landscape, they could revisit more basic choices regarding monetary arrangements. This includes the foundational role of the central bank, as well as more detailed policy choice on how to ensure the continued operation of monetary policy transmission, improving the efficiency of payment system, especially cross borders, safeguarding financial stability, expanding financial inclusions, and enhancing investor protections. Other part of the international finance that we will be covering during our program will be in the area of trade finance. The COVID-19 crisis came during a transformative period for trade finance, largely through digitalization and the emergence of new trading platforms. The pandemic has caused banks to focus their funding on establishing relationships and start considering shift in their product and process, including by the use of new technology. We will discuss during our conference the key trends in the world of trade finance. Last but not least, digitalization has entered into the capital market, but not as quickly as in other parts of the financial services industry. Capital markets in emerging countries are in a development phase simultaneous with the digital revolution. And our last panel will explore what all this means for capital markets. So an important program with 3 high-level sessions that will be chaired by eminent moderators and panelists. We will start in a few minutes with the first session that will be moderated by Deputy Governor of the Bank of Italy, who is currently chairing the G20, Dr. Pesarelli. And I'm now giving back the floor, President Al-Hamidi. Thank you and all your staff for making this event a reality. I think it took a lot of time to gather and moderate all our speakers, but I think we come up with a very good outcome, and we look forward to a fruitful discussion during the day. Over to you. Thank you.
Thank you, Mark. Now, can we go to the first session? Alessandra, please. Alessandra, you are mute. Alessandra is with us, I know that, but you are still mute, Alessandra. Very good. We don't want to delay the first session, and Alessandra, my understanding, she will join us in a few minutes. Let me go to the first session, the cross-border payments dimension of digital currencies. And as we will give each speaker in this session a few minutes to make their introduction, let me go to His Excellency, the Governor of the Central Bank of Bahrain, Mr. Rashid Al-Mi'raj. Please go ahead, and thank you for being with us.
Thank you, Dr. Abdurrahman, and fellow governors, ladies and gentlemen, good afternoon. I would like first to thank Dr. Abdurrahman Al-Hamidi and his team for organizing the conference, which covers a very important issues of direct relevance to the current topics on digital transformation. I must also acknowledge the excellent efforts of the IMF team to focus on the evolving trends in financial technology. These efforts have triggered wide interest among Arab central banks on financial innovation and raised the awareness on the challenges posed by the new technological innovation on financial stability, financial inclusion, and banking regulations. I'm very pleased to have this opportunity to speak to you this afternoon on the work that we are doing in Bahrain in electronic payment, digital currency, and the regional cross-border for the Gulf Cooperation countries. In Bahrain, we have implemented many initiatives in recent years to broaden the digital boundaries of the payment infrastructure, ensuring financial stability and financial inclusion. These include the implementation of Fawri Plus, which is an instantaneous payment. One can make a peer-to-peer Fawry Plus transaction 24/7. Fawry Plus has addressed the most serious end-user pain points. CBB digital currency e-dinar projects will be end-to-end digital domestic currency payment platform that is interoperable with other domestic payment systems. This will take into consideration security, safety, privacy, and cost to become widely adopted and systemically important payment infrastructure. When considering the diversity and interdependencies in the cross-border dimension, the success of any digital currency system will depend to a large extent on the interoperability with other systems. Achieving interoperability between two or more cross-border systems is challenging. Technical issues related to harmonizing standards and compatibility with legal and regulatory requirements are imperative for the successful operation of the cross-border payment schemes. The Gulf Cooperation Council has forged its own path for cross-border payments. Last year, the Gulf Payments Company was established with the aim to provide a regional payments infrastructure that will act as the backbone for the broader payment ecosystem in the GCC region. Gulf Payment Company is owned and led by the national central banks of the GCC countries. We are also part of the Pan-Arab cross-border payment system, BUNA. More details will be covered, hopefully, by the AMF representative in the session. AFAQ, which is part of the Gulf Payment Company, will comprise all the products delivered by the company in collaboration with the GCC central banks. The first phase of AFAQ services is in operation since December last year. It started out with banks in Saudi Arabia, opening accounts in SAMA RTGS, and Bahrain banks holding accounts at CBB RTGS. Central Bank of United Arab Emirates, together with their banking community, are currently in the onboarding stage. The remaining central banks of the GCC will follow shortly. AFAQ is built on fixed intraday exchange rates and flow of transaction between GCC banks via their central banks. The service caters for the payments between participants, while settlement enter NCB balances at the end of each business day. GCC central banks provide the domestic RTGS infrastructure, and GPC will be the link in the middle. This will allow for quick settlement, cheaper transaction cost, avoiding complex corresponding banking requirement, and no foreign exchange exposure. In conclusion, I would like to thank again the AMF for the opportunity to participate in the conference, and I wish you a successful event. Thank you.
Thank you, Mr. Governor. Alessandra, are you with us? You are
Yes,
muted.
I am. Yes, I am. Good morning.
So you take over now.
Thank you so much. This is such a great opportunity for me to be moderating this event today. I have the honor to present a number of very distinguished speakers that will be today talking to us about the dimension of digital currencies within the very interesting and full of innovation, at the helm of innovation, that is the big theme of payments on a cross-border dimension. So today, I have the honor to introduce the Governor of the Central Bank of Bahrain, Rashid Al Marai, the Chief Executive Officer of BUNA, Mehdi Mana, the Chief Executive Officer of P27 Nordic Payments, Lars Jørgen, and the Senior Advisor of Accenture, Ousmane Mandeng. The speakers will have more or less 10 minutes each, and I would like to leave, 15, 20 minutes, if possible, for questions from the floor and for wrap up, from myself. What I like to say today is that we have seen in this point of time at global level a surge and acceleration of innovation in the sector of payment systems, in the sector of new solutions for cross-border payments. I think that the pandemic has, besides giving so much grief to all of us, has given us a boost in order to connect people and find technical solutions that can bring us to a higher level of solutions for this very important area of development. So I will introduce now my first speaker, and also, here we go. I'd like to introduce my first speaker. Will be Mr. Al-Maraji that will intervene now. I don't know whether you will present some slides or whether you're going to give us a presentation without slides.
Alessandra, please, because there were technical problems connecting, we started the session. Governor Al-Miraj already gave his remarks, so we would go to the second, please.
Absolutely. So Mehdi Manas, so now the Chief Executive Officer of Buna, I believe you have some slides to present.
Yes, indeed. Thank you very much, Alessandra, for the introduction. First of all, I have indeed few slides to share with the audience today. It's a pleasure to be with you and to share the idea and the vision of Buna for a digital-based cross-border payment. What is important, first of all, to say about Buna is its context or its initiation. Buna is not just one alternative channel to process payment at cross-border level. It is not just one more commercial offer addressed to the banks. It's a strategic initiative. It's an initiative that is supported by the authorities of the region. It has been initiated by the Council of Arab Central Banks and Monetary Authorities, and it has very important and very critical objectives in terms of empowering Arab economies with all what it entails, meaning further integration at the regional level, further collaboration between these different countries by different aspects. First of all, by the promotion of the use of regional currencies for cross-border payment, which is very exceptionally the case today, apart from a couple of currencies, more or less. It aims also at reinforcing the relationship between the countries of the region and the trade partners and the rest of the globe in more general terms. As we all know, digital payment are also very important vehicle to reinforce financial integration as well. So these are the objectives that are behind Buna. It's strategic. It's a collective approach. It requires collaboration between public and private sectors in order to be successful and delivering all its promises, which we are doing in the current phase. Going to more details to explain, really maybe in a very simple way, the objective of Buna. It starts by the easy image of the complexity of cross-border payment. As you can see on this slide, there is a huge difference between the way payments are processed at national level, where in most of the countries in the region there are very efficient, very modern very innovative market infrastructure. There are more and more initiatives to bring further innovation, further initiatives in a multiplicity of countries of the region. When it comes to cross-border payment, it's a different story. It continues to be fragmented, it continues to be complex, and it continues to rely on solutions that maybe are not anymore up to date. And that creates a lot of inefficiencies, it creates a lot of frictions, and of course it reduces the opportunities that could exist at regional level or even in terms of further collaboration with the rest of the group. Buna comes with the idea and the objective, I would say the ambition of making cross-border payment as efficient, as simple, as easy, as cost-effective as domestic settlement. The key point is that there are today no market infrastructure to allow cross-border payment in an efficient way. The example of this nature are very limited. We'll hear about from P27 in the next segment of this session. But apart from P27, few other CLS that we could mention as well, examples of market infrastructure that exist at cross-border level are limited. And this is why they continue to be very complex and very difficult to manage. What would that bring if we detail further the differences between the traditional model and the Buna ambition, starting by the cost. So the friction that exists today, the fragmentation that exists today, and the complexity of establishing these complex network per currency, per countries, depending on counterparties, is totally eliminated. And Buna is replacing it with a centralized solution that is cost-effective, in addition to the fact that in our approach, in our proposal, we are basing the offer on a pay-as-you-go model, meaning that a participant in the system will not face any fixed costs, any costs that are not connected to the use of the platform, in order to eliminate any financial barrier to join and embrace the solution. A second important challenge that will result from the introduction of Buna is the speed and the certainty about the payment. Today, on average, cross-border payment in the region take 2.2 days. Actually, based on my personal experience, the last time I initiated a payment, it did not take 2.2 days, it took 10 times more than that, 22 days to have it processed from one country to another. In addition to the fact that I did not have any visibility on that payment, my bank did not have a visibility, they were in contact with their correspondent, the correspondent did not have a visibility. Buna is replacing all this complexity with a real-time settlement that offer traceability of the payment, in addition to a certainty of the payment, because we are providing immediate finality with the settlement in the system itself. In terms of complexity also of supporting multiplicity of currencies. Today, banks, they are also dealing with this barrier that for each and every currency, they need something totally different in place in terms of arrangement, in terms of relationship, in terms of legal construction, in terms of compliance as well. Buna is offering with one single payment system access to a multiplicity of currencies, and in particular to a mixture of Arab and international currencies, which are today already onboarded to the platform. The same applies to the network. Establishing relationship with partner banks is today very complex. It requires a lot of differences in terms of setup, technical, legal, commercial. Everything has to be reviewed on a case-by-case basis. With Buna, all that is eliminated again. connection to Buna offers access to a wide network with a maximized number of participants, no barriers to entries, and increased opportunities. One more critical point in the context of cross-border payment and multiplicity of countries and network is the element on the compliance. We all know the challenges that the current setup entails in terms of difficulty of compliance, which also create other side effects in terms of de-risking, complexity of access to certain currencies, etc. Buna align the level of compliance on the different international standard. In a cross-border context, it's important to bring a reference. That reference with a centralized system like Buna could be proposed, could be ensured by the system itself. This is why we made a very courageous choice in Buna, because usually compliance, and in particular AML and CTF checks are responsibilities that lie with the participant of the payment system, but not with the operator itself. In Buna, we made the choice of including an additional layer of compliance in the system itself, because of the need to provide the certainty and to provide the trust and the reassurance in a centralized way, to make sure that in addition to the obligation of our participant to comply with these different regulations, we act there as an umbrella, making sure to our partners that we are checking this compliance, and that we are making sure that the network as a whole in Buna is safe and playing in line with the rules that are imposed by the different regulators for each and every currency that is embodied in Buna. With all that, what is important to highlight is that Buna is not an idea anymore. It's not a project anymore. It's reality. Buna is there. We are operating on a daily basis. As highlighted by His Excellency Mr. Al-Hamidi, we are in this current phase onboarding the banks, increasing the size of the network, and we'll see more and more of these benefits materializing and coming to light. One more very important dimension in my view, and I'm happy to have this session covered under your moderation, Alessandra, with the presidency of the Italian presidency of the G20. We did the similar assessment and similar comment with the Saudi presidency last year regarding the fact that Buna is fully in line with the G20 agenda in terms of reinforcing and strengthening cross-border payment in order to make them more efficient. The work that has been delivered under the Saudi presidency has resulted in identifying 5 focus areas, 19 building blocks. If we go through them one by one, Buna is ticking all the boxes. So we are fully in line with that agenda and providing already a very tangible and concrete example of what could be achieved under this agenda. That also materializes with different aspects, because cross-border payment cannot stop at any border to be efficient, and it's not about just making the region stronger from inside. This strength cannot be achieved without better connection with the rest of the globe, and in the context of Buna, we are enforcing that, as I said, with the inclusion of international currencies. We are enforcing that with the openness of the participation to international banks. We are in these days in multiple discussions with different partners, for other financial market infrastructure, other networks of payment to ensure and explore interoperability between the Buna network and their network. That has in particular the aim of reinforcing the trade relationship with the different partners and maybe creating new ones. Again, we are convinced that Buna is there to unlock really existing potential and to create much more new opportunities. Few references have been made during the session already to the current pandemic crisis and its effect on the financial dimension. From time to time, we receive the question on whether Buna is still needed with the current difficulties that are faced at financial level globally. Our response is very easy, that if Buna was needed before the crisis, it's needed even more with the current challenges, because a solution like Buna, which are really providing this integration regionally and which are improving the interconnection between the region and the rest of the globe, would be a key instrument in supporting all of us in overcoming the current difficulties and contributing to the global economic recovery. Thank you very much. This was my last slide, and happy to join again the session later on in case there are questions about Buna.
Thank you so much, Mehdi. This was very comprehensive. I'd like to join in by saying that, of course, the effort that we have this year in the under the G20 presidency is one of covering again these issues, and we have recently launched a tech sprint, a hackathon that will continue over a period of 2 months. That does include this idea of developing a economic growth which is sustainable also from the point of view of the climate change. And so technology that goes together with green economy. There'll be 3 different calls with different sort of sets of issues to be addressed, mainly in order to develop technology that can make it easier to gather data on these issues that are related to climate change, and then technology that allows a better analysis of the data that are so far, that are this way collected. We'll talk about that. I'd like to introduce my second speaker. Before that, I also like to announce that we have Jakuti Solanki as a speaker with us today. He's the CFO of BigPay, is one of the oldest US companies that deal with blockchains and payments. So my next speaker is Lars Jørgen, the Chief Executive Officer of P27 Nordic Payments. So we're going in another part of the world and another experience. Please, Lars, join us.
Thank you very much. And just if someone could give me a thumbs up if the sound is coming through. Perfect. Thank you very much, and good afternoon and good morning and good evening, depending on where you are. I'm really happy to be here together with you, talking about something that is close to my heart, and I think very much close to the heart of all of us that are here. I'm also very happy that payments now finally has moved from sort of the machine room of the financial institutions up to the boardroom level, where I actually think that they deserve to be, because payments in general are so important for growth of society, for innovation, and in general allowing people to meet and work together. So I think that this is fantastic, right? And what has happened now, we know it, and I will not spend much time on it. But of course, the unfortunate situation with COVID has accelerated some of the trends that we have seen for a long time. Growth of e-commerce, contactless, all of that, right? I think we are faced now with a very interesting period in time. I think that Buna is doing something that is really amazing, and that you have also moved from one place quite quickly. P27 is also a kind of an initiative that has started a couple of years ago, taking a little bit different route and different starting point. But in the end, I think that we share very much the same goals, making cross-border transparent payments transparent and cheaper and easier to do in order to improve the customer and user experience, obviously. I will share with you a couple of slides, and then I'm really happy to engage in and answer to questions in a little bit later in the session. And now I am hopefully going to see if the presentation starts to show up. P27, we are anchored in the Nordic countries. At the same time, we are working in an ecosystem of many other initiatives that are going on. The G20, as I mentioned, I think it's really great to bring sort of the globe together around something that is this important. But we have other initiatives also in more on a European scale. We have Target, we have the SEPA, we have the EPI initiative that is also sector driven. And some of these are public, and some of these initiatives are sort of run by the industry. And I think right now we really don't know exactly what the end game is. What we do know is that we have a number of problems that we need to solve. And if looking at sort of the middle column here, in the Nordic countries, that is Sweden, Denmark, it is Finland, Norway, and Iceland. We are sharing some common challenges if you have. We have a large number of legacy infrastructures that were built for a different time, that are function very stable, right? But they are not really up to meeting the today's and the future standards and requirements, right? So what do we do? Upgrade 8-9 systems, or do we actually try to replace them with something that is much better? And that is really what P27 is about. One infrastructure covering the Nordic countries, connecting the 27 million people that lives here and also beyond, right? At the same time, we have an ambition to fix some of the standardization problems. With the different currencies comes different payments products. In Sweden, we have 70 different payment types to make a credit transfer. Do we really need that? In many other countries, it's the same situation. We need to deal with the fact that we are not a part of the euro system, in the sense that we are not using the euro. We have our own currencies, Finland the exception. And we are also close to cashless. It is more or less impossible today in large parts of the Nordic countries to pay with cash. That is just the reality. And that is something that is driven by consumers. They have seen that there are other ways to pay, doing it on mobile, and in Sweden and Denmark, close to 90% of all people are using mobile payments today, right, through their favorite mobile banking apps. The problem is there that they are not connected to each other. They are strong domestic champions, but they are not interoperable. And that, together with all the other issues relating to cross-border, just gives a very complex, intransparent, and still very costly cross-border payments experience. That is something that we realize that we need to deal with. And that is why the 6 largest banks in the Nordics came together and said, okay, we can take responsibility for the infrastructure by actually upgrading the existing. And in some of the countries, that is not very difficult because there is a tradition of working together. And in Sweden, for example, the legacy infrastructure is actually owned by many of the banks, right? So this means that this migration and upgrade is something that we as an industry can take responsibility for. At the same time, we have initiated a payments council where we place the standards. So we have a kind of a division in between governance and the operation company. And at the same time, we are addressing then not only the legacy transactions, the batch payments, but also we are addressing the instant payments issue. And by having this in the same system, we can and have designed this to work cross-border, basically making a cross-border payment exactly as standardized as a domestic payment and also with the same cost. And that is actually quite important because this is a volume game. So if we can bring a lot of transactions into one system, and it could, I think the ideal would more or less to have an even larger one. The TIPS platform is getting close to it. But having one system gives so many benefits actually. But now we are focusing on the Nordic countries. But interoperability with other schemes is super important also for us because no country today or region is an island. Absolutely not. So we are very much open to connecting to other, I would say, regional initiatives. It could be Buna, it could be others, right? It could be that we are looking at other parts of Asia. It could be that we are looking at US, UK in a way to simplify this and make up for solving some of these issues also, because we need to move from this 3-day leap time in cross-border payments and many of the initiatives today saying that they are offering real time. They are not really real time. It could be 1 minute, 2 minutes, 40 seconds. It's still not real time. So we need also to look at what is it actually that we are bringing to the market. So this is very much what P27 is about, replacing batch payments, instant payments, cross-border by fixing this bottom up, replacing existing legacy infrastructure. And what can you then do when you have a well-functioning platform? I think that Buna was onto this as well, right? AML, money laundering, one of the biggest problems that we have today globally, and also fraud. You can institute very efficient transaction monitoring regimes on top of these type of platforms. And that is for us very much the next level of P27, together with other, I would say, payments products like a harmonized cross-border bill payments solution, interoperable with similar solutions that is coming and existing in the rest of Europe. This is P27, and how does this then relate to the other topics that we are discussing today? Well, we also fully support the G20 and the FSB roadmap for cross-border payments, and we are very happy with the groundwork that was done by Saudi Arabia that is now carried on by Italy. We really think that this is super, and we must all unite behind it, I think. Then also to be really successful, I think it's important that we see this as a collaboration in between the public and also the private sector, so that we get solutions that are, I would say, innovative, that we have solutions that is covering all the problems that we see. For example, our participants are talking very much about the liquidity management issue, right? The liquidity, especially when you're working across different central banks, currencies, and so the liquidity side is quite an issue actually. And I think that here we need really to work together to solve also that challenge. Another conclusion that we have come to from our side is that we need to do the Alexander stab and actually take the pain of replacing some of the legacy infrastructures. And that is painful and that is complex. But if we don't do that and just add on top of the existing infrastructures, I don't think that we will get what we need to have in order to deliver on the various visions. We have also seen that working with 4 central banks, with 4 FSAs in the Nordic countries, with the European Commission, with the European central banks and others, we think that there is still a lot to do when it comes to harmonize on the regulatory side. The requirements for operating a platform like P27 or others, they are very different even within Europe. And that is something that I've called on the Commission and ECB and others to see if they can sort of speed that work up, because it would be really helpful in order to have more of a, I would say, portability on certain of the licenses, so we don't have to apply for a new one and a new one and a new one. I think if we really want to achieve a change here, this is an area where I think we can do much more. Then this conference is about central bank digital currencies. I think that is a fantastic innovation, and it can actually solve, when I look at it and when we look at it, many of the challenges that we have today. Especially if we combine it with the distributed ledger technology, we can, and there is a true possibility here to make money really intelligent, right? So that money in itself more or less can detect if they are being used for I would say more shady purposes like money laundering or fraud or so. There is just a distance to go from where we are today until that vision. So for me, the CBDCs are super exciting to work, at least to start with, in parallel to the existing systems. And then, is this then evolution or is this revolution? I think it's probably a little bit of both. But the ongoing experiments, and as some of you know, the Swedish central bank is one of the front runners when it comes to I would say a domestic digital currency. We see that there needs to be a link in between that currency and existing currencies, and then also start to look at how can this actually be solved cross-border. So I think there is a lot of work still to be done before we can replace everything we have today with I would say a cross-border digital currency, but it has lot of promises for the future. And then just go to my final point here, and that is actually that while talking about the innovation and how to bring the perfect solution, don't forget that we have problems here and now today as well. So please continue to support ongoing initiatives like the P27, for example, or the roadmap, as I said, right, in order to fix the problems here and now today, and in parallel work with the perfect solution for the future, and it might actually be a CBDC. I will stop there. Thank you very much for listening in.
Thank you so much, Lars. I'll take these three issues. You know, they'll stay with me, and in the end, I would like to go back to Governor Al-Maraji that I missed because of a technical issue that I experienced before joining you, with some questions about the role of central bank digital currencies, the development and the future. We'll get there. But first, let's hear from Ousmane Mandeng. He's a senior advisor at Accenture. So please join us.
Yes, hello. Thank you, Alessandra, and many thanks for the opportunity to speak to you today, to Reinventing Bretton Woods. Accenture is a proud sponsor of the Reinventing Bretton Woods committee. I would like to take the view of a practitioner and focus specifically on CBDC. CBDC was mentioned several times. Accenture is one of the leading companies when it comes to the implementation of CBDC. We work with a number of central banks, including the Riksbank, as Lars has mentioned, on the e-krona project. We also work at the moment with the South African Reserve Bank and the French central bank, the Banque de France, on a wholesale CBDC project that focuses specifically on wholesale payments, cross-border payments. I'd like to maybe take a step back and just highlight what is CBDC really about. And the idea is, think of CBDC as being the adoption of a new medium, a digital token that is a new format of money. So it is to complement the existing formats that are central bank reserves and banknotes. And digital tokens can be exchanged in a peer-to-peer transaction, similar to cash. So CBDC is a lot about establishing much more direct payments relationship than the indirect payments relations that rest on the account-based systems that are dominant today. And this is really what should bring the efficiency gains and the speed and that current payments simply, are struggling to perform. And then on top of it, it allows also to make money programmable, to become smart. Lars alluded to that, because these tokens, you can embed even the most complex business logic, so that money actually, becomes something that is driven in a predetermined fashion by the issuer. When it comes to international payments, of course, there are many frictions in international payments, and CBDC clearly cannot solve all of them. And to alleviate these frictions will depend on a lot of things, including in particular regulatory. And we need to think, of course, in parallel, not only about the technological innovation that CBDC could bring, but also all the other obstacles, of course, that are closely associated with international payments. Now, I mentioned that the idea is to establish more direct payments relationships, and one critical idea is that CBDC to have a meaningful impact, it would have to be accompanied by a change in the access policy that central banks maintain today. The idea is that CBDC should also be held by non-resident entities. Now, the ECB, in its report about the digital euro, has already alluded to the possibility that a future digital euro may be held by non-residents, and that is the essential innovation. It is the idea that money as a token can be passed on, like you would be sending a text message or an email. So money today, of course, never crosses borders. Money never moves. The idea with the adoption of a token is that money can move. It becomes like a good that can be transferred from one wallet to the next. And it is by that you can have these direct relationships, which is likely to make payments so much easier, so much transparent, and so much so much more efficient. Now, for international transactions, the idea is that we should be able to conduct payments similar to conducting domestic payments. And CBDC is about conducting payments irrespective of space and time. But CBDC is not so much about payments in a narrow sense. It is much more about settlement. And in an international context, it has a lot to do with how can we merge the life cycle of an asset with the life cycle of cash. And this is really where a lot of the focus is to take advantage of the fact that the token-based environment allows us to converge asset and payment cycles. And that should lead to the fact that we can exchange an asset, which can be a security, with another token, which can be cash. And these direct token swaps that would allow us to conduct true delivery versus payments and true payments versus payments transactions that are all instant and also so-called atomic, meaning both legs of the transaction have to be successful for the transaction to succeed. And that basically means that there will be no more open positions in international trading if we were to use these token-based capabilities. It would make trading far less risky, far less costly, and obviously and also far speedier. So CBDC is I'm repeating myself, but it's not so much about making a payment by which it would just constitute another payment rail, but it is really about settlement, and especially settlement in an international sort of dimension. Now, Lars mentioned one point, which is liquidity. Now, we imagine that in a world of instant and atomic transactions, we would have far less liquidity requirements than we have in today's world. But one additional aspect is key, namely, would central banks be willing not only for residents to hold CBDC, but also to accommodate directly external demand for CBDC? And that would be something novel. Of course, central banks are intervening in the foreign exchange market in order to accommodate foreign demand for their currencies, but they do so only indirectly. With CBDC, there would be the possibility to accommodate external demand directly. Suddenly, central bank money, which is very local today, would truly become international. Namely, its demand would be driven not only by the local banking system or money market conditions, but also by external entities. So it would change the concept of money. Money could become international, from being extremely local today to something like other goods and services that are driven not only by local, but also by external demand. And then a last aspect I would like to mention is the notion of transparency and data that CBDC could provide. Alessandra mentioned the fact that we want more data, and CBDC, of course, generates an enormous amount of data. And we are working on a number of projects where we try to extract the data that is provided in real time in order to provide a much better sense about the formation of payment patterns, both by industries, by end users, by geography. And CBDC could become that instrument where the central bank suddenly has instant access to information. In retail, it would mean visibility it simply doesn't have. But even in wholesale, it would allow it to achieve a sort of, a visibility of transactions, which is probably unknown today. So I just wanted to give you a few elements here, and about what CBDC is about, and again, just to re-emphasize, one of the most important use cases is the international use case. So for international payments to be used, mostly for securities settlement, and in particular foreign exchange. So just to conclude on foreign exchange, if you imagine in the future we can exchange CBDC for CBDC, so principal for principal, in incident atomic transactions, we would have no risk anymore in exchanging foreign currency. So it would be a true evolution from the current state, and something that would make international trade, international transactions far safer, far cheaper, and therefore should be highly supportive for developing financial integration of the international economy. I shall stop here. Thank you, and happy to, of course, to take questions later.
Thank you so much, Ismene. Before we take questions, I see already one very interesting one actually coming through the chat. I'd like to go back to Mr. Governor and ask you, your position on this very topic, argument issue that has been raised by our speakers, and therefore the advent of central banks' digital currencies. I already have one of our friends who were asking us whether this should be allowed to work alongside stable coins, whether there is a possibility for these two levels to coexist, and which would be their way of really being on the market together. So up to you. Thank you.
Thank you very much. I think I've listened with a lot of interest and anxiety, I would say, with the last comments by the gentleman from Accenture. I wish that we don't make our imagination for a minute runs ahead of ourselves. The project that you are, or the concept that you are talking about, or from what I gather, is a little bit scary to me, looking at it from a central bank governor who has a responsibility to make sure financial stability of the system, to ensure the ability of the local economy to function in an efficient way, outside any externalities that will limit their ability to have adequate liquidity and efficient managing their resources. If I understand correctly, what you are saying is that a new project or new concept of this CBDC, an international or a global token, that will be a unit that will almost eliminate local currencies. in order to make this system works with minimum friction and less transactional cost. I think this is a little bit very far-fetched. The same resistance that we witnessed over the last year or so by the concept of Facebook global cryptocurrency and other initiatives. I think this would put us in the same opposing position. What I understand, this CBDC is going to facilitate financial inclusion. It will eliminate certain friction within the existing payment infrastructure. I'm talking about the domestic now, and improve the efficiency of transactions and the flow of transactions and business transaction within the country. If you try, or if the idea is to reduce this at the local level, I think you will find it very difficult for many, many countries across the globe, especially on the developing countries, that will be more or less robbed from their constitutional authorities to control and manage their own economies. And I think this is, for me, is no go at this stage. But I would like to see within this concept, to have a system that will evolve, which I again repeat, will ensure financial inclusion domestically, will create an improved levers for financial stability, and any doubts about finality of the settlements will disappear. I mean, this is how I see the role of central banks, digital currencies in this context. If we move for cross-border, I think that would be a different scope of work that needs to be looked at in a separate forum, so that we just don't upset this picture at this stage. I mean, this is my initial reaction to the comments raised by our colleague here.
Thank you. Thank you so much, Governor. And I think that it's good that we talked about this, because it will give me a very natural sort of way to introduce our last speaker, Jakuti Solanki, CFO of BitPay, a blockchain company. I think it would be interesting to see now, Jakuti, your point of view on this specific issue. This is very much at the helm of the discussion that we're having right now at international level, European level for sure, is one of the issues that we are debating about, also looking at the advent of DM in the international payment market. So Jakuti, the floor is yours.
Thank you so much. Thank you everyone for having me here. Is my voice clear, by the way? Can you guys hear me?
Yeah.
Okay, great. Yeah, so everything I heard so far, I mean, it sounds very exciting that all countries are, looking at CBDC or some sort of blockchain payment as a way to revolutionize the entire payment industry, right? Very quickly about BitPay, we are today the world's largest crypto payment processing company. We actually started about 10 years back. Our founders, right after the Satoshi's Bitcoin white paper, they got this amazing idea, how about we kind of create an infrastructure where we can have a seamless and efficient peer-to-peer payment processing system, starting with Bitcoin. So about 10 years back, we started with Bitcoin as the use case, and then today we have evolved. We are today accepting about 10 different types of cryptocurrency, half of which are what we call stable coins here in the US. So we accept all of those as as a way to accept payments. And over time, we have realized more and more the importance of CBDC or stablecoin or any blockchain-based asset that is pegged with some sort of local currency, right? In my personal opinion, I think the traditional finance system and the evolving or the emerging finance systems need to work hand in hand. I really think there's going to be a hybrid model of both kind of, the traditional dollar or the traditional local currency and the tokenized version of the blockchain-based payment, kind of going hand in hand, to make this whole process seamless. I mean, one of the things, that we at the company, when we got into the space, what we wanted to help was with what can we do to make payments more real time. I mean, real time is almost kind of a nice to have concept, but it's not, practically possible. So near to real time, right? Today it takes 2 to 3 days to process an international wire or settlement, and average fees could be anywhere between 6 to 8%. What can we do to bring that down? So at BitPay, for example, we charge 1% for cross-border payments or any kind of domestic payments. And with that, a lot of companies that are working with us, they are able to maximize on that 1% fee versus a 6 to 8% fee. And then also eliminate any kind of foreign currency conversion issues by using crypto or any kind of blockchain based token as a way to facilitate payments. The other huge benefit that we see is the KYC, know your customer, know your business, all the AML protocols that the platform needs to have, so you can legitimize the entire transaction, right? That is super important, and I've heard other folks in the panel say the same thing. The importance of having that legal structure around all of the payment mechanism. So we have done that on our protocol. Coming back to the CBDC, I guess discussion that we were having. In my personal opinion, this would be an ideal scenario would be where, I'll just give my example. If I'm in the US, I was raised in Sultanate of Oman, so very much on your side of the world, and my parents are still there. So say, for example, today I'm in the US and, I have a wallet where I have a Bitcoin and I want to be able to use, a Bitcoin or a stable coin that I have in my wallet. But I want to be able to use, that same crypto in Oman to buy some merchandise. It would be a very nice feature where within my wallet, I'm able to convert a US-based stablecoin, say a USDC or a Paxo or whatever, right? Convert that to a central CBDC or any stablecoin that's say used in Oman or Abu Dhabi or any other country. Within the wallet, I'm able to do the dollar for dollar conversion without having to lose any time. It's a real-time conversion or almost a real-time conversion. I'm not getting charged any kind of additional fees to be able to convert, and I'm almost swapping one CBDC to another CBDC based on a country. And in that country, I'm able to use that CBDC like I'm able to use, local currency. With knowing that, the comfort that I would need as a consumer is that CBDC pegged by something that's, accepted nationally or, from a legal standpoint. Like in the US, if I'm using USDC, I know one USDC is pegged by a US dollar. So if I want to sell my USDC, I can liquidate that right away and get one USD, right? So the pegging of the CBDC to any, to something that's more liquid, I guess, that at least in the near time, that comfort or that assurance is super important. Down the line, maybe 10, 15, 20 years down the line, maybe it's just CBDC that replaces the entire monetary system, but that's a very far-fetched, goal. I think, in the near future, I totally see a traditional currency and the CBDC kind of working hand in hand to get more user adoption from that standpoint.
Thank you so much. This has been like a very interesting conversation. we are very much at this point of time concerned about the timing of development of central bank digital currencies and the competition that there will be in the marketplace between private, stable coins and the central banks issued by central banks digital currency. So I do not have other questions. We're running a little bit behind on our time schedule, so I will stop here. I thank you so much, all our guests today, and I'll pass it on to the organization. Thank you.
Alessandra,
Thank you.
Thank you.
Thank you
I would
so
like
much.
to respond to the governor.
I already had a response from the governor, which was led the way to then our conversation with Jacques Rutte. I think there is a very interesting point there. As a central banker, I understand pretty much, what the governor has shared with us. I think we are in a position where we need to understand how we do not stifle innovation, and at the same time, how we continue to maintain and continue to do our duty on the financial stabilities of our economies and our countries. So this is where I think the point of interest it is, and I think that discussions at international level like this one help very much in addressing these issues and moving forward.
Yeah, can I quickly say something? Or
of course.
Yeah, I would just on the point the governor raised about my remarks. He seems to be suggesting that I had this vision of just a single currency dominating all transactions, and that is certainly not the case. CBDC, is just another format. I said that from the beginning of central bank money. So it just makes exchanging monies far simpler, and that is where the emphasis is. So it's a lot about taking frictions out of the system, and per se, it shouldn't impair the ability of central banks both to conduct monetary policy and preserve financial stability. The external dimension can add, obviously, a factor to the formulation and execution of monetary policy, but so do financial flows and capital flows today. Dollarization, of course, is another phenomenon. And here we need to think of policies that could mitigate what could in fact be factors making the conduct of monetary policy and preserving financial stability more complicated. But I think CBDC should be seen, again, as taking frictions out, allowing more direct payment relationship. This is, I think, where its advantages lie.
Okay, I don't know whether the governor wants to have a word or we can stop here. Up to you. You're okay. All right. Thank you so much. I pass it on to the organization. Thank you.
Alessandra, thank you so much for being with us. And I would like also to share with you, thanking the very distinguished speakers about the issues they have raised about cross borders, different issues, technical, legal issues, connectivity issues, compliance issues, G20 cross-border requirements, etc. I think this is a very informative session. And then lastly, the central bank digital currencies, which is an interesting debate with this session, and it provides a background also for the implementation session on the trade finance dimension of the cross-border and the innovation and digitalization.